This is your emergency broadcast system announcing the commencement of the annual purge sanctioned by the U.S. government. Weapons of Class 4 and lower have been authorized for use during the purge. All other weapons are restricted. Government officials of ranking 10 have been granted immunity from the purge and shall not be harmed. Commencing at the siren, any and all crime, including murder, will be legal for 12 continuous hours. Police, fire, and emergency medical services will be unavailable until tomorrow morning at 7 a.m. when the purge concludes. Blessed be our new founding fathers and America, a nation reborn. May God be with you all.
Yes. What's going on, man? The purge. Yeah, so apparently we're selling off on information we already knew. So FMOC wants to raise interest rates. No shit. I think we already went through that. So I don't know. I'm not sure why that's new information. I guess they want to raise them more aggressively. That scares some people. What's up, Michael? Yeah, I mean, it's old news. I guess what freaked them out is there's some on the committee who want to do it a little more aggressively. All right. Unfortunately, Bitcoin is still just a tech trade on steroids. Follows the tech market. It's basically like owning the TQ. I mean, it hasn't decoupled from the stock market. So, and I'm going to say that's because the same people own that own DraftKings and Peloton and things like that. One day, hopefully that'll change and Bitcoin will become its own thing. Right now it's not. So anyway, yeah, I mean, I think that sell-off this morning, I don't know. To me, I feel like a bottom. Like this is, I don't understand, it's the same old information. So I don't know who would be selling here. But it is a stage 4 decline. I wouldn't be, I wouldn't be necessarily buying or selling here. I mean, it's the same old information. Yeah, this could be a reversal candle, so we'll see. I don't buy that stuff. I follow the money flow, and I wait for the setups. You're in a buy and hold. I mean, even in a buy and hold, this is still not extreme. So everything's pointing to further downside. So we'll see into the close. But this is a stage 4 decline. So that was a 1. Over here was a 1, ran up, stage 3, stage 4 decline, and we started to go into a breakout, and now it's come back down. So, bear market for a lot of stocks, man, a lot of stocks. So when you hear the talking heads on TV talking, they're not talking about individual stocks. Remember that. They're talking about index funds, which is made up really 5 stocks push the index funds. I mean, if we look at the Qs, I was saying this morning in our Discord group, you could get short. I mean, the problem is you got pretty decent support here. We're getting a sell signal. So if you were going to hedge, this is where you would do it. This is where you're going to hedge. Your trade. This is the area that it's bounced, multiple times. That was a sell signal, and it held all 3. So I don't know if this breaks. Maybe it comes down into here. Maybe it comes to the 200. I don't know. I'm just not really in a big interest to short. You could. So if you wanted to try to short the Qs, you want to do it on an up day like today. So if I was looking to get short, I'd be looking right here, and I'd be looking at the SQ. and you have your buy signal. Big breakout. So today would be a buy signal if you're looking to get short. I'm not a big fan of it. It just kind of goes against my nature. It's not that I don't understand it. Technically, I completely understand it. This is the chart you're looking at on a weekly if you want to get short. As you can see, it doesn't work very often. I like to win. So I don't like to play games where the upside is 29 to 30% of the time it works. Not my game. But if you were going to, today is the kind of day that you do it, man. Amazon is the same as all these other stocks, man. They're all tech stocks. They're going to roll together. Let's see. Yeah, so, that's one way to short. Another way, if you wanted to short, so if we're looking at the SPY, let's say you're long the SPY. SPY's trying to push back up above the 20. But if you wanted to get short, this is when you start to look at that. And I would use the SPXU if I was trying to get short. This is ProShares Ultra Short. As you can see, it's starting to form a breakout. But again, these breakouts, they only work sometimes. Most of the time, you're going to lose money on them. And most of the time, it's going to be money that you could have been adding to your buy, your long position. So that's the dilemma with being short. It's an ego thing, Guys get short, they make money, they like to brag about it. It's a penis compensation thing, usually, is what's going on, It's the 4'8" guy in the gigantic truck. But if you like doing that, this is how you do it, right here, SPXU. I wouldn't do the VIX. A lot of people like to. Most of my degenerate gambler friends like to do the VIX. If you are a degenerate gambler, the VIX will be your tool. You're probably going to hear some banging. They're working on my roof. If we back up the VIX, you can see this has always been a really great, awesome trade where every once in a while it rockets up, and that plays to the male ego thing. And people love to be right on the VIX because they think it makes them look smart. I got long the VIX. Okay. So, that's your game. You could play the VIX. I'm not a big fan of the VIX. Let's back it up to the monthly. This is the VIX. It's just straight down, man. Every once in a while it works. Not my thing, man. Not my thing. So let's see. I really think we wait here, man. I wouldn't commit a lot of money. Bitcoin's back down to the 30 or 42 range. I've been talking about, I'm not the only one. A lot of people, anybody using support, none of this stuff is magic. Anybody using support and resistance, we've been kind of anticipating if this 46 level didn't hold, which it didn't, would break. And then if it breaks, we just assume it's going to the next one. So the next one is a little lower. So, I wouldn't be surprised to see. Yeah, I'm out of ride, bro. I've been out of ride for a while. And I closed WBX this morning. Probably a little premature on that. I was basically even. I don't want to ride that down. I'm happy to get back in if it goes back up, but I didn't want to ride it down. I'd much rather ride down Zynga. I like Zynga. They make real money. They have real customers. It's a real business. So this is where we sit with Bitcoin. If you didn't have any, not a bad spot for a position, but it's still not extreme. Look, 31. It can go more extreme. So, which tells me it goes lower. Pretty close to where it stopped before, right? Yeah. So Let's see. If you're not in cryptos, this is a great time to establish a position. Keep it simple. Top 5 coins. Like, don't be complicated about it. Keep it simple. The goal isn't to get some unusual coin that nobody knows. You just want to build a position. Let's see. Buy the dip, short the VIX. Are you going to hold your BTC? Yes, of course I'm holding my BTC. Yes, I'm holding it. I think the risk is to the upside, not the downside. Meaning, if it runs without me, I'll never forgive myself. If it goes down, okay, it went down. But if it runs without me, I can't live with that. So that's how I make that decision. You may not, if it's not a conviction for you, you should have sold yesterday when support broke. If you're short-term trading, then you use stop losses and you put these stops below, these structural areas where price breaks, and when that happens, you would have got out, man. So if you're going to use stops, you got to be able to get out and get back in, get out and get back in. You got to be comfortable with that. Can't bitch about it. Don't cry about it. You're the one that put in the stop loss order. So, Sol's on my Sol and Ethereum. But I'm not picking up any Bitcoin here. I'm looking to pick up some Sol and Ethereum, to be honest. I got a pretty decent position in Mana right now. If I didn't own any Bitcoin, I wouldn't wait. I'd start picking some up here. I'm trying to think of another stock. If you don't own, I was saying this morning in Discord, we've had some new people. I'm in DOT as well. Some new people. In my buy and hold, I'm not going to fill my buy and hold full of, DraftKings. And I like my buy and hold to be dividend stocks. But I do keep a few speculative players. I have Uber and Lyft in there, and then ARK. Those are about the only 3 that I hold that don't pay a dividend. But, ARK at these levels, you see it coming back right now. This is stupid cheap, man. So if I didn't own any of these type of stocks in my buy and hold account, I definitely would be trying to pick up some ARK. Is today the day? I don't, not really. Not according to the money flow. If we're this is gonna hold all my coins, not selling anything. That's what I'm talking about. Let's see. Yeah, there's still a lot of coins that look good. I'm shocked how low. What's up, Anthony? I'm shocked how low DraftKings has gotten. I mean, there's just no love for these stocks right now. It's coming back. We can see that. So we're seeing buyers come in. Yeah, that little yearly dividend's not shit, though. Doesn't hold dividend stocks, bro. I mean, it holds a couple. Yeah, and we see BABA breaking out. I'm long the yen. I'm not long BABA. We'll see. We'll see if this thing gets some traction. Well, I don't think these stocks are getting smashed because of Cathie Woods personally. They're just using her as the whipping board. Let's check in on Roku. Yeah, dude, Roku's right. This is technically back in the box almost. A lot of these stocks. I mean, what's up, Ashton? Something you should. I mean, Roku's back. Basically at support. We'll see. The moving averages are still down. We could call this a box, dude. It's a lot of mixed signals, though. Most of the indicators are pointing down. Stock's kind of holding this level. I would wait, man. Let's see what happens here. SoFi's a nice one. I don't know. I'm not committing any money here. I'm gonna kind of wait and see what happens. We'll see. You know, ARK is basically the index fund for this stuff, man. I trimmed a couple stocks yesterday. I trimmed Exxon. I know how you guys are green weenies and you're out there and you're solar and you're all that stuff and you don't like oil, but I love oil. Dirtier the better. So trimmed a little bit of Exxon. Not much. I just wanted a little bit to maybe add to some other things. So Exxon banging that 70 RSI. What else do we have hitting? Oh, RTK, Raytheon. I hope you got some war trades going on. What was it, RKT? We got some war trades going on. No, what the fuck is Raytheon? My brain just went think. What's the ticker for Raytheon? Or come on, somebody knows the ticker for RTX. God damn, my brain is. I trimmed a little, just some odd lots. You know, like if I was sitting on 93 shares, I took 3 off. Raytheon's hitting the previous high. That's the money flow pattern. Still love the stock. It's close to that 70 RSI. Still undervalued. I'd like to add to, the one reason I trimmed is I want to add to Lockheed Martin, but that ain't going to happen, it appears. So if you remember, oh Jesus, here they go. I'm going to kill the comments if these motherfuckers keep fucking with me here. This is the bread. Here we go. We'll just kill the comments on Instagram. It's unfortunate. Then when you report them, they say they didn't do anything wrong. So this is a classic. I added this to my buy and hold last year toward the end of the year. I think around in November, end of October, November. We had this massive sell-off. I mean, it dropped from $375 to $325, $50 in one session. I don't want to buy that. That's crazy. You wait. And what are we waiting for? We're waiting for it to go sideways. And that's what it did, right? It started putting in a box. And then about right here, I started looking to buy some. And we added it to the buy and hold. And, you know, it's kind of just creeped higher, man. And the goal, you know, these large cap dividend stocks that pay dividends, when you see them, I'm telling you, this will be the easiest trading you ever do, okay? Easiest trading you ever do. It'll fall, and then it'll put in a box. And it's under the 200, and it pays a dividend. And then you wait, and you follow money flow, and you let it do its thing, and it'll come up here, and it'll bang this 200. And that's it. That's the whole trade. Easy peasy. Let's see. Bonds are on my radar. I know none of you guys are watching bonds. You should be. 33 RSI. It's now below the 200. That's got my attention. You know, happened over here. Didn't stay there long. Now it's happening again. So what I'm waiting for is just any kind of sideways action here. Ideally, price breaks above the 5-day. So now I'm watching the MACD, right? I'm waiting for that movement to that way. I'd love to see a little breakout here. This is just now forming. So this is just the beginnings of a possible stage 1. We'll see. You know, I'm shocked bonds sold off yesterday. I don't know what was said that nobody knew. Other ways of playing Bitcoin, I'm sure you know, the GBTC is trading at a discount to the Bitcoin it holds. It was at like a 20% discount. So this holds more Bitcoin than it's valued at, the fund. So there's a margin compression there that it could catch up at some point. I mean, I would think it would. Technically, stage 4 decline. We'll just wait and see, but that's definitely... My man said, this live chart from what site? Does it matter? Does it matter where the chart's from? Let's see. Dash is one that I was kind of upset that I never got into. And look at what is happening now. Now you get your chance. Remember when everybody loved it at 250? Now it's 135, dude. I would take a shot at this. This is not quite set up yet for me. It's not quite set up yet. But anywhere in there, I'm cool. Like, I would like to get in this stock. So definitely one to keep in mind. Is Zynga coming back? Yeah, again, I don't understand the sell-off. Everything they said, I already knew. So if it's not a surprise to me, I don't understand. Zynga's coming back. Nice. I don't know, man. What's up, Ashton? Jump on in here if you're still on here, bro. We'll bring Ashton on. Live from the basement. All right, we just got a chair. So, maybe Ashton's otherwise disposed. Let's check in on Uber. Are you around, bro, or what's
Sorry,
up? What's up?
Just tracking. We got a kitten about a month ago, and I had to track his little behind down. He's all over the place in the basement. So.
Look at that Uber comeback, dude.
You know what? I was actually looking at Uber today. This is the first time I looked at an Uber chart in probably 2 or 3 months.
Man, that thing, it touched 40 and then just whoop, right back to 42.
Yeah, so I heard you mention Zynga just a little while ago.
Yes.
So my charts look drastically different from yours because mine are targeting a squeeze.
Right.
And Zynga is forming a squeeze right now.
Yeah, dude. So, and fundamentally, this is a legit business. They make money. You know?
Yeah.
It's not like a penny stock. I mean, even though it's a low cap stock.
Right.
I think Morningstar has like a $12 valuation on it.
Which would be more than a 2x from here. Right.
You know, does it ever get there? I don't know, but it could definitely get to $10.
Yeah, well, I mean, let's just look at this for a minute. I mean, shit. Price is here, and I'm looking at a daily chart. If we just go up to the 3 ATR here, and I'm not going to explain what these are, but usually this is like the cap for at least for the short term. Mm-hmm. And if it just ran up to here, that's $7 and $7.25 right there. I mean, shit, that's a 40% return right there.
Right. I'm down a little bit in it, but I started building pretty heavy in this 625 range when it started. It looked like it was going to break out again.
Yeah.
And now it's kind of just pulled back where I started putting some size on. So no big deal. I mean, we're basically right there again. So
let's. I'd be interested to know what the price was prior to it taking off last year. So in 2020, the price was it's pretty much right back at what the price was before 2020.
Right.
So, and I mean, the company isn't going backwards. You know what I mean?
No.
So, if the price goes back to what it was in 2020 and the company has gone forward with expansion or products or whatever, I don't know the company all that well, but and the price is back to where it was, that margin right there creates the opportunity, man.
I think so. You know, one that's kind of bunked the trend, I don't know if you follow Tree at all. It had been decimated too, but now it's starting to creep up, and it's up 4.5% today. I haven't talked about this one in a while, but I actually put this in my buy and hold a while back. I always keep like, you know, a couple, you know, non-dividend type payers in there. Mm-hmm. This was one of them, and I'll just hold them until they do something. You know, I had Uber in there, Facebook was in there at one time. Tree I thought would do something, but it's been pretty beat up, but looks like it's breaking the trend now. It's headed higher.
I want to put one on your radar. Lucid, LCID.
Yeah, let's see, LCID. Yeah, it's coming right back in that box, bro.
Yeah. It's got a nice consolidation box for about a month now, and it came down out of it today, and it jumped right back in it already today.
Right. I was in WBX. This is probably a better play, this Lucid. Man, I like that. That's super bullish to come back in the box like that.
Yeah. And I'm actually in it already. I put this play on, middle of last week, so it's only been a few days. But another reason why I really, really like this is, and this just happened today, so going back to the squeeze, so this is kind of like the TTM or MACD histogram. It's kind of similar, but this is the Squeeze Pro. And what we're getting on Lucid right now is, you see these dots?
Right.
So we got a black dot, then a red dot, and then today is just formed a gold dot. And a gold dot means it's a high squeeze, which are extremely rare. And this histogram is about to flip positive. So you pair this with the high squeeze, about to flip positive, back into the consolidation box with the hammer candle today, that we could see a pretty large move in Lucid soon.
Nice. Yeah, so you're tracking a lot of that squeeze stuff, huh?
Yeah, it's probably in the past 3 weeks I've been tracking mainly these high squeezes, and I've traded 6 of them in the past couple of weeks, and all 6 have been profitable.
There you go.
Yeah, these high squeezes are no joke, man. They really move whenever they get going.
Nice. Let's see. So yeah, Lucid looks good.
And plus, Lucid was just added to the NASDAQ.
Was it?
Mm-hmm.
Let's see. Gush is up 6%. That's one I'm in.
Oh man. I'll put another one on your radar too. I'm watching very, very, very closely gold.
Yeah, I'm long gold right now. Let's see the UGL. Yeah, doesn't look good. So you're long. What are you watching about? What's got you interested in gold? I'm long silver too, by the way.
Yeah, silver's looking pretty. This is not like a trade that I'm looking to get in and out of in the matter of a few weeks. This could be a year-long trade. So right here, I'm looking at gold on a monthly chart. So if you look here down at these dots again, so all these green dots mean the squeeze is fired, and this goes over like 2 years time span. Black dot means a low squeeze, red dot means a mid squeeze. And these red dots on a monthly chart are very rare. We've gotten 3 of them in a row on gold. So if this histogram flips even slightly to the positive side, this could be a year-long trade, and gold didn't do a damn thing last year.
Right. Yeah, man, you know, gold is very, I don't know. I used to be, was one of my main assets, and I keep staying with it because I know the moment I finally give up on it, it's probably going to have an historic run.
Yeah, throughout my trading career, I think I've only traded gold or commodities in general maybe 3 or 4 times.
Yeah, they're very frustrating.
Yeah, they are.
Very frustrating, man.
So this one, I've been watching it every day. I'm in no hurry to get into it, and I'm not going to enter it until I want to see this histogram flip from red to yellow, because that means that the downward momentum is slowing down. So, but if I don't get it, I'm not going to jump in it.
Right. Are you trading any of these crypto stocks?
Oh yeah, I'm in Riot. I've been in Riot for a minute. I'm actually technically upside down on the trade because I have shares in it. But this entire time, I've been writing covered calls against my position.
Oh, nice.
So, and these, both Riot and Mara, the option contracts on these things are extremely juicy. So I've been getting some very nice premium for about 3 months. So my cost basis is up here, but if you add in the premium, my cost basis is actually somewhere down here.
That means a lot of kids are buying calls on this stock, thinking it's going higher.
I mean, yeah, the put to call ratio on these stocks right now is definitely favorite calls, and it has been for a while now. So,
yeah.
The one thing I don't like about them though is they move in lockstep with Bitcoin.
That's what pisses me off too, because I have such a large exposure already.
Yeah.
That when I just step in here, it's like, all right, I can buy more Bitcoin. You know.
But here's the thing: they on a fundamental level, they should be doing the opposite of what Bitcoin does.
Right.
Because if Bitcoin goes lower, they get to buy more.
Right. That's how I see it. But even like coin, like the fact coin goes down when Bitcoin goes down, it's ridiculous. People are fucking selling it, which is making them commissions. Like,
yes, it makes zero sense.
Yeah, they're making money both ways. I mean, all they should really need to go up is volatility.
Yeah, so I mean, one investment of my long-term hold is Voyager. It's the same concept as Coinbase. Mm-hmm. And if you look at Voyager, not even a month ago, it was at $20. It's below $10 now. Right,
Voyager is one that I need to get in. What's the ticker on that?
This is an OTC stock, so it's VYGVF.
VYG.
V is in Victor.
Oh.
YGVF.
Okay, so I got VYG.
VF.
Okay.
I got it right here on my screen.
Okay. G. I don't have my glasses, so I'm like half fucking blind.
Change your Z to a V.
Yeah. I see what I'm doing. I'm also in the dark. The light kept reflecting off my... There we go. Damn. Yeah, man. I mean, it's down 50% from the high, right? Which is basically tracking Bitcoin, right? Like it's...
Yeah. Which it shouldn't be.
You wouldn't think. I mean, you would think they would prosper from all the volatility. I'm sure they have. I'm sure the company's doing great.
Well, they just released their numbers yesterday, and you can't make this shit up. They just released their numbers yesterday. They had a 45 times growth in their number of funded accounts and their revenue. 45x in both of those.
And the stock is down.
It's crazy. And they're actually backed by Mark Cuban too. So I mean and the reason why they're OTC is because they're based out of New Jersey. New Jersey has some crypto regulations, which forces them to be OTC, but they're looking to become listed on the New York Stock Exchange this year. And if they do that, I would not be surprised if this went from a $10 stock to a $75 stock. But I've been wrong before.
Is this company? Why is it showing Canada?
Oh, they're listed on the Canadian Stock Exchange.
Oh, duh, yeah. So yeah, they got a $24 rating on tip ranks on the 4 analysts that follow this.
Yeah, and the once they become listed on the New York Stock Exchange and get off the OTCs, I mean that'll go from 4 analysts to probably 10 or 15 analysts. Right,
and this one guy, he just reiterated it yesterday.
I mean, shit, let's just take the 24 target. I mean, that's that's a 200%. Not
Right,
200%.
just get back to the previous high. I mean, that's 50% from here. Well, that's 100%. What the hell am I saying?
Yeah.
That's a double, man. So if you're looking for a buy and hold, just to lock away, if you're into crypto, I mean, this is one way to do it.
They also have their own token. It's
right.
called, VGX is their token, and they really have really cool rewards on that on their platform, on their app. And I've been stacking some VGX for a while too. Yeah,
man. So. That's the it's easy too. Like when we get into a sector, as traders, investors, we start kind of nibbling around the sector, right? So like, let's say a guy gets into gold. Next thing you know, he owns gold stocks, right? And then he starts going from there. There's always another layer and another layer that you can start to add. And next thing you know, you're just knee deep in that one sector.
That's what we're seeing right now. And people who are just tech heavy right now are just getting smoked.
Right, and I think we've both learned that lesson over the years, and it's easy to do, and it's easy to get caught in that. That's why for me, separating my buy and holds from my trading and my riskier stuff helped me in my mind because it's boring to come over here and go, well, let's buy some Hanes brands.
Yeah, hey man, the boring stocks. Those are what are flying right now.
It's the ones that have been working, and Hanes brands is the one I've been adding to. I've been trying to.
So we jumped into this trade. This is a Nucor. This is a steel play.
Oh yeah, I'm in Nucor.
Yeah, and this is as boring as it gets.
Yeah.
And I'm trading it a little bit differently than you. I'm trading with some options.
Right.
And we got in right here, nailed this move all the way up. This was over 100% move right here in options.
Nice. Yeah, I'm sure it was. It was a hell of a pop for that stock.
Yeah, and now it's coming back down to earth, which, by the way, folks, this is why you stick to your sell targets, because this was my sell target right here. I got out, and then people were saying, well, it can still go up. Yeah, it can, but it can also come back down to earth the very next day.
Man, I was just having this conversation. Once you have to get super clear of what kind of trader you're going to be. And if you're doing like you just said, here's my target, boom, it hits it, you're out, man. If you're a short-term trader, that's it, it's over. And if it goes higher, that wasn't your trade.
Yep, deviating from a plan rarely works in your favor.
Right, but we get a lot of mixing. I'm like, are you swinging it? Are you short? What are you doing? Well, and it ends up being, based on what's happening today, I change,
Right.
And you can't do that, man. You got to stay. And it's okay to let it go without you. You did what you were planning to do. You got your money. It goes on.
How many times have you either seen people talk or said to you directly, like, oh, man, I jumped in the same trade as Gerald did, and I made more money than he did.
Oh, yeah.
Well, that's because Gerald stuck to his plan.
Yeah.
And you may have made more money on this one. You may have won the battle, but in the long term, you're going to lose the war.
Yeah, and the same as if you're position trading it and trying to build a position over time, then when it goes down, that was kind of part of the plan, right? Like you stick to your guns. Like here's steel. This is X. And while I would rather trade this stock than buy and hold it, but as an example, if you were buying and holding it, I'm probably looking at picking up shares in in these zones here.
Right.
And then just letting it do what it does, right? As it slowly. But if I'm trading it, then I got, So the clearer you can get, I think it definitely helps you in not blurring the lines. Like Uber's one that I've been position trading, Lyft, PayPal, some of these. That doesn't preclude you from short-term trading them also. Some of my best short-term trades are stuff that I've owned for 10, 12 years. Meaning, because you get so familiar with it, right?
Right.
Nucor Steel's one I've owned. That's actually based near my house in Texas.
Really?
Yeah, and I don't remember, 10 years ago, I drove by it, and I'm playing the game, look for ticker symbols, and I saw it, and then I just searched it on the internet, and it came up to an article with Jim Cramer, and he liked it at the time. And yeah, that's how I got into it. And it paid a little dividend, and I've owned it ever since. But dude, for years, those steel stocks were shitty, you know?
Yep, yep.
And I should have been just adding and adding. I owned it, and I let the dividend drip, and then it just took off. I think I'm up like 60% in it. And that's all been in the last short period of time, though.
I mean, same with utilities. I mean, shit.
Oh,
you look at utilities the past couple of months. Wow, and that just did a slow, brutal bleed for well over a year, just in general. And and this is one thing I preach and I preach and I preach, is that you want to become a good trader. You don't have to be a great trader, but if you want to become a good trader, you have to make a priority to understand the entire market. You have to.
Right.
Because, I mean, you can't. Well, some people say, well, I just trade tech, or I just trade the FANGs, or I just trade whatever. Mm-hmm. I get that, but I haven't seen anybody do that successfully hardly ever.
It's tough.
So, sector rotation is a very real thing. We're seeing it right now. And we saw the sector rotation going into utilities, back in October maybe?
Right.
And it just gone straight up.
Yeah, which was good for me because that's my largest positions. And that just happens. Here's why, though. Look, this is that we were just talking about Nucor steel. Mm-hmm. 2011, fast forward to 2016, 5 years later, it's the same price, dude.
Yeah.
I mean, it went up a little bit, came back down. So, I mean, that's what I was saying. I owned it for years and years and years, and it never did shit. And then, look, I mean, even every time it would run, it would just come back, you know? So here we are, 2020, fucking 9 years later, it's basically the same price again. And then now look what's happened. I mean, it went up almost 300%.
The one thing I've noticed over the years about, I'll call them the boring stocks, like your dividend plays. I wouldn't really throw those in there, but your utilities, your energy, oil, those kinds of stocks, is that whenever they get a rotation into them, it's like a freight train, Right. And it's not like those stocks will run and run and run and run and reverse on you overnight. No, they take a while for that reverse to the downside to really take place. So that can really allow people to get some very nice profits in there, and more often than not, they're steady profits, which is always nice.
God, dude, look, if you step back, this is a monthly chart of the XLU, the utilities ETF, which is like boring shit. Look at this thing. I mean, it's crazy, right?
And those drops in March 2020 never cease to amaze me.
I know. If we could only go back. In every one of those big drops, man, I've looked back and been like, damn. They're just not easy in the real time, right?
Mm-hmm. Man, I remember. I think you and I actually went live the day that I did this. I think at the bottom of the market, Uber hit, because I was looking to go heavy into Uber at that time. Uber hit like $13.86 or something like that to the penny.
Yep.
I caught Uber at like $13.92. I was like 10 cents away from the bottom, right. And I just backed up the Brinks truck at that time.
Yeah, because I bought some. I don't remember if it was on that day, but around that same time, and I split it with Uber and Lyft. Same thing. I mean, at one point I don't know, it was up quite a bit. I bought I had like $2 or $3 grand, and in my IRA I bought some SPY, and it just happened to be like it was either the day of the low or the next day, like the low, and it was
either
just
one.
Straight up since then, man. And I'm like, oh my god, why didn't I buy the U Pro? What the fuck was I thinking?
Oh, and plus you're getting the dividends.
Plus the dividends. So, and I'm not a big ETF guy, but when you can get them just dirt cheap, I mean, nothing wrong with buying one and just holding it. I mean,
right. Especially the market.
Right.
Shit.
Looking back, it should have took out fucking loans probably and bought it. I mean, it just always looks so scary at that time,
Yeah, and just to make everybody feel a little bit more comforted, whenever the market does do that, which happens once every 8 or 9 years or so.
Right, it's rare.
Even the most seasoned traders and investors are their judgment is at least a little clouded, you know?
Yeah, I mean, for sure.
We're all human, man.
You know, yeah, and it's especially as you get more and more money. Like, so when I started in like early 2000, the 2003 crash, I was like a newbie, you know?
Mm-hmm.
And I didn't know what to do. I just watched my money go down. I lost a shit ton trying to buy .coms that don't exist anymore. And then, you know, you learn more. And then in the 2008 crash, I think I had like right at 80,000, 75, 80,000. I watched it fall to like 30. I didn't know what the fuck to do, really. So I just started buying the SPY. Every day I would just buy some of the SPY. And then, you know, it recovered. And because I bought a bunch low, I got back to even by like 2009, you know.
Nice.
And then my dad
just from mainly buying the SPY.
Just from buying the SPY. And then I started, you know, as that came up, I started peeling the money off of the SPY and allocating it to stocks. And I recommended that strategy to a guy who's a little freaked out by all the growth stock sell-off. I'm like, just buy ARK, bro. Just buy ARK. Hold the other shares, and then when ARK and when recovers, your other stocks will be recovering too, right? And you can just peel the money off of ARK and start putting it back into stocks. I mean, don't.
Is this ARK that you're looking at here?
No, that's the SPY. I was just curious if it was back above the 20, which it.
I was gonna say, I was like, I could have sworn ARK was down a lot more.
Oh yeah, oh yeah. I was. Yeah, ARK. Look, ARK just went green.
Oh my god.
Yeah.
You know, I do have a very, very strong feeling that 3, 4, 5 years from now, Kathy Wood is going to be laughing all the way to the bank.
Yeah,
I do.
I think
I
so
really
too.
do.
I hope. Look at PayPal, man. That stage 1 it's building is just.
Oh, that's what I have pulled up here. I want to point this out to you. This one is high alert on my radar. Normally, with options, I trade whenever the trend is going up. However, these high squeezes that I mentioned to you, these are no joke. And PayPal just popped up on my radar today, forming a high squeeze on the daily chart, and it's having a pretty nice green day. So we could see a nice pop out of PayPal soon.
Yeah, this one's way undervalued, man.
It's ridiculous. I actually think PayPal, if you had to put PayPal up against Square, I think PayPal could outperform Square for the year.
I mean, it's green. It's up 2%. That's pretty nice. Let's see. Yeah, Square's gotten just blasted. Square's tracking ARK. I mean,
Square's also now that Jack Dorsey's exclusively with Square or Block or whatever it's called now. It's kind of tracking crypto now too.
It is. I'm hoping it'll break that link. I'd like to see. Yeah, I don't know, man.
So I think the market really needs to disconnect
Yes.
the current correlation between these stocks and crypto. Now, if you're trading like Bito, which is the crypto futures ETF, well, no shit, that's going to run in parallel with crypto. But some of these other stocks, they have no reason to be running with crypto. They should actually be doing the opposite.
They should. But you know what the problem is you have so many weak hands holding it who probably don't understand why they own it.
Yep.
They think, well, if Bitcoin's down, then I should sell this. It's like it's not even a real business to them, which is fine. I mean, that's a part of the market. You know, if you're just purely trading technicals, you actually don't give a shit what the business is, right?
Yeah.
I mean,
with these blockchain companies like Riot, Mara, they're not really a stock in my. They're more like an asset class in my opinion.
Right. I could see that.
Because their sole purpose is just to accumulate Bitcoin.
What a beautiful business, huh? You know,
Sure.
This is what I don't understand. And my fear, one reason I haven't jumped headlong into a lot of these Bitcoin mining companies is because I did that with gold mining companies. And the worst run businesses on planet Earth are gold mining stocks.
I mean, shit, most of the gold mining stocks are like pure, authentic penny stocks anymore, right?
Right. Even the big ones, you know, like Freeport McMoran, that's probably a big one. but they're all run shitty. They totally extract all of the value out of the ground, literally, and then they sell all of their gold. They hold no gold. So that tells me what you think of the value of gold. Like, they literally dig it up, sell all of it, pay themselves bonuses, and move on. And if they thought at all that gold was, like, really valuable, why would they not be holding back gold?
You're talking about physical gold?
Physical gold. So it's good to see some of the miners will actually stockpile gold. I mean, or Bitcoin. CLSK is one I've had some big gains and some big drops in. I like this stock, dude. These guys are mining. These guys do energy stuff, but they also have a mining side to their business.
Crypto mining or
Right,
gold?
right. So CLSK is actually a technology company that does energy. Like, they create software and various things to help your factory be more energy efficient.
Gotcha.
But one of the things they've done is create shit for Bitcoin mining. And then what they did is just started mining it for themselves. And so as they mine it, they're just keeping it on their balance sheet.
Gotcha.
Yeah, well, that's fucking beautiful. Like, you're just getting richer and richer every day. But it's because of that, it's being treated as a growth stock, a penny stock, and a crypto stock.
Man, this looks like it's one of those stocks that once it gets going, it gets going. There's not really much consolidation there.
Yeah, and it does it to the up and the down. Like, look
Right.
at, I mean, that move just straight up.
And it's straight down.
So 100% run up, and then just devastation down. So I don't know. This is another one like that Voyager you're talking about. This could really get some, like you said, get going. But you got to be able to. I mean, you could short-term trade it, but man, it's a brutal stock.
So what is it? It's priced at $8 and change right now?
Yep, and it's been as high, dude, in the 40s. And I think tip ranks. Most of the people that follow it, it's an interesting business. If you go read it, they do some neat stuff. And that's when Clean Spark. I got into it because of the energy component side of it. There's only 2 analysts covering it. And then the Bitcoin thing came later. Like, they added that shit later.
Another stock that I'm looking at. This is more of an intermediate play, and this is outside of the utilities. I mean, this is as boring as it gets, and that's Disney. I was actually looking on tip ranks yesterday. They have like a 30% upside target on Disney right now. So I'm actually looking for it to get back down to 150 right here. And if it does, I'm gonna do some lead contracts on it. Just do some year out calls.
Disney. Have you seen IBM chart?
Man, that's a chart I haven't seen in a long time.
Look at this. Isn't that crazy? The IBM chart.
Well, damn, that filled that gap with a vengeance.
Yeah, this was we were talking about this in our Discord, and it it got smashed. And technically, it's a dog of the Dow out of my book, right? And some people were buying. I'm like, yeah, you could. It's a dog of the Dow. And it went straight freaking up, man.
Look where it stopped, too, huh?
I mean, picture perfect trade. Breaks the 20, goes right to the high, fucking sells back down. I mean, it. And I didn't take the trade, though.
That gave zero shits about the 200 right here.
Yeah. And which is another one of my trading pattern. I look for these dividend stocks that go under the 2. So it literally did everything I ask of a stock, and I just looked at it and didn't buy it.
Man.
And
see, this right here, this steadiness right here, this is what I miss.
Oh.
I mean, oh my gosh, I miss a normal, quote, normal market.
Right.
Because you would get steady moves like this all the time.
Mm-hmm.
But now we're starting to see shit like this in the QQQ. Like, how the hell can you trade that?
You can't. And people are asking me, is that a stage 4? Or I'm like, I don't know what the fuck it is, man. It's a giant stage 1 with a stage 4 inside it. I don't know.
It's crazy, man. I've never seen this kind of volatility.
Right. And I can't short here because it's put in, that's pretty decent. If you were looking at this as a short-term trader, to me, it's hard to short this unless this breaks, right?
Right.
I mean, I don't know. Maybe if it gets up into here and doesn't go above the 20, you look to short it.
See, that's how I see it too.
Right.
Because
that's how I've always shorted.
With the market, if you draw, I mean, look, this is as clear of a consolidation zone as you can possibly make right here on the QQQ. And what I've seen, really since the pandemic started, is that if you have especially to the downside, if you see it breaking to the downside, and you short it, more often than not, I've seen people just get absolutely smoked because it just rebounds to the upside and it rebounds hard. I mean, look at that day right there in the middle.
Yes.
Right there.
Yep.
No, down. The low right there.
Yep.
If I'm not mistaken, I believe that was the day that we had record amount of puts in the market in a single day ever.
And it went straight up.
And they got smoked.
Yeah, so, I'm not bullish or bearish on this. I'm kind of agnostic, to be honest.
Yeah, same.
It's hard to get. And then if you look further out, I mean, there's support at this area. That was another zone where it stopped. And you know how charts work. They like to look for those little zones.
Yeah, this has algo trading written all over it.
Yep. Now, if this breaks, yeah, maybe it runs to the 62. I would just rather have my powder not be looking to pick up some of these deals like PayPal and these others. It just, that this is really like 10 stocks that make up this index.
I mean, yeah, 10 stocks make up probably 30-40% of it.
Right, and a lot of the other stocks in it have been in a bear market. So it's hard for me to get too aggressively thinking short in a bear market, which, as far as I'm concerned, we're in a bear market with a lot of stocks.
Right now, if I'm looking at this here, looking at the VIX,
right?
I mean, it keeps flirting with 20, and if the VIX gets over 20, to me that constitutes like, hey, we're bearish.
Let's see,
and it's been over 20 several times today.
Yep. I mean, damn. The VIX is so difficult to play. I get a lot of people want to play the VIX.
Hell no.
Yeah, you want to really just use it as an indicator, like a MACD or something, not really try to trade it.
Yeah, I mean, if you want to try to get in and get a quick buck,
I guess
cool.
If you're fast enough, yeah.
Yeah, but that's the thing. I mean, you got to be quick because I mean, this thing can go from 20 to 16 in an hour. And
what about?
Yeah.
Let me bring one.
I've had my run-ins with the VIX. I actually used to trade the T-VIX. I know you did too back whenever it was a thing.
Yeah.
And I won a lot of money on it.
Yep.
But then I got my ass handed to me.
And for me, it just seemed to distract me from solid, good trading.
Yeah, because the chart means nothing on the VIX, really.
And it turns so fast. American Eagle Outfitters was one that I was kind of stalking. It was lagging the other retailers that had, a lot of them had broke out. I think Bed Bath & Beyond is up today, ain't it? No. But a lot of these are trading under value. They're below the 200. And American Eagle Outfitters, they have a dividend. They pay about a 3% dividend yield.
Nice.
Trading at $24. Let me see. I think they have it. Yeah, they have it at. The analysts have it at 36. That's 50% higher. And that's a chunk of analysts. It's not a couple.
So, to me, that with a stock that pays a dividend like that, I mean, that's. I'm not a dividend investor, and as you know, but if I were, I mean, I'd be eating stocks like this up.
Well, and as a trader, this is what I was teaching some people is because it pays a dividend, if it's safe, there's a bottom to it, right? Like there's a level where AT&T will just stop going down because the value now of the dividend comes into play.
Yep.
And a lot of those institutional, the hedge funds, the insurance companies, if they see a good dividend stock below that 200 that's really undervalued, there's money will step in and pick that up, like we saw in IBM. Now I don't know that.
Look at Ford, man.
Yeah, that's been one of my great trades of the year. Remember at $7 and they cut the dividend.
Didn't Ford get down to like $4?
$4, dude, and I bought shares there. I didn't go heavy, but I bought shares at $4, and I'm up like 400, whatever it is on those. And they're paying their dividend back again.
Yeah.
I did a video on that. It was showed how I was getting a 20% dividend yield on Ford.
Yeah, see, that's another thing that people don't understand with dividends too. Is that like if you're buying accumulating shares over a long period of time, your dividend yield technically doesn't remain the same. It actually goes up.
Goes up. People don't get that. So I had a video. Well, and these people were calling me idiots because they didn't understand this. They're like, "Oh, this guy's a dumbass," and I'm like, "Listen, if you even let's take a stock like AT&T or MO. If you bought, say, $10,000 of it 10 years ago." As they pay you dividends and you acquire more shares, your yield in that stock goes higher and higher and higher compared to a guy that just bought it today, you know?
Look at AT&T. Wow.
Yeah, that's another one that...
you know what? I gotta be honest. I despise this company.
Yeah. I've gotten lucky in the last... I'll call it luck. I mean, obviously, I don't know, but obviously, my tradings have been smashed with these growth plays, but in my buy and holds, my largest positions were Ford, the AT&T and Verizon, oil stocks, and utilities.
Damn.
And those have all just gone straight up, man. Like I wish I'd have bought more here. I didn't. It finally got so cheap. I'm like, shit, maybe there's something I don't understand that's happening with the business, you know?
I mean, it's borderline impossible for those stocks that you just mentioned to go parabolic.
Right.
But this is a pretty good happy medium. I mean,
yeah, this is as parabolic as AT&T's going to get. It's shocking. And matter of fact, when it broke out, I was like, I am not adding. I'm not falling for that shit again, you know?
Yeah.
And it just kept on marching. But again,
what's AT&T's dividend yield up to now?
Well, after this big ass fall, I think it was back down to 5 or 6% because they had cut it, you know.
Yeah, it was up to like what, 9%?
It was 9%. They cut it back a little, which they needed to. Their debt is just ridiculous.
I don't see in any world how they get out of that debt.
No, I don't think they ever do. They just keep rolling it forward.
It's crazy.
Here's Verizon. I mean, it went right to that 200 and stopped. I mean, right on the money. Bam, stopped. Anytime you get these guys, there are people in the world, they need passive income. They get paid to buy income. Yep. And as long as that dividend is safe at a certain point, this becomes attractive to them. And they have to buy shit tons. They're not buying a little bit. And when they buy it, it starts pushing it.
Yeah, and really, I don't know Verizon's fundamentals, but with AT&T as an example, the only reason people buy AT&T is because of the dividend. That's it.
Right. It's not like it's got anything new going on.
Yeah. I mean, the only thing new is their balance sheet and their debt increasing. That's really about it.
This is one I've been adding to. International Paper. They pay a dividend. I've had it a long time in my buy and hold, and it's come way down. But I wasn't adding until it got under the 200 again. Mm-hmm. But now it's back on my radar to buy some. I haven't bought it in a long time. Let's see. I'm trying to remember what they have on it. Yeah, not much upside. They only got a $54 target. But as you can see, at 45, that wasn't too bad a deal. The higher this gets, the less valuable that is to me. You know.
I had somebody, bless their heart, I don't know, I can't remember who it was, but that's irrelevant. But they come to me and they say, "Hey, this is a while ago. Hey, how do you like Coca-Cola?" Okay. And they said, I forget what the price was, and then I looked at the chart, and I looked at what analysts were putting out as price target. It had like a 2% upside.
Right.
I was like,
yeah. So the time to buy Coke, if you're going to buy Coke, is after a nice stage 4 decline. So I think it's about even money right now, right? Let's see. As far as the value,
it might actually have some downside to it.
Well, they're showing 63 right now. So basically, we're at even money. I mean, it pushed up to, and what's funny, you notice the RSI is extreme, like it's hitting extremes right at its true value, right? Mm-hmm. So, if I needed money to buy growth stocks or to buy something else, this would be what I would go to because it's not cheap anymore. It's like fair value. So how much money do you want tied up in fair value?
And Coca-Cola is not going to go to $100 a share.
No. And you know, you were talking about earlier about knowing the market. This is one of those things, right? Like, if this is fair value, something's got to happen for the analyst to jack up the price. Like, something in their business model, right?
And unless Coca-Cola comes out with some kind of elixir from the fountain of youth to put in their drinks, they're not going to.
No. So it'll move higher with the average multiple of the stock market. Maybe something will happen, sugar prices or something. It'll bring it down. It'll do. Then you see the little pattern that it does, man. It'll go sideways. It'll run up. It'll go sideways. It'll run down. So if you're wanting to buy these stocks like Coke, IBM, AT&T, wait for this shit. And then just start nibbling.
That right there. I mean, this is trading and investing 101. That's how you grow wealth over time, folks.
Right. And when it goes up, just leave it alone. Wait for it to come back. And then just hold it the rest of your life. And if you just keep doing that for the rest of your life, you'll probably end up with a bunch of money.
I had some people in my group, and I saw all over Twitter, all over, so really everywhere yesterday. The market was down, or the QQQ rather, was down 3% yesterday.
Mm-hmm.
And it never fails, man. Every time we have a pullback, even if it's still well above support, the world is ending.
Yeah.
And I said, listen, if your game plan is to trade for the next year and quit, then yeah, I can see how you would look at that. But that is not the goal here. If you have a 5-year, 10-year, 20-year outlook, this is what you want.
You need this. You need it. You
because
really.
I mean, you could gain wealth over just dollar cost averaging, regardless of where the price is.
Sure.
Buying the spot, whatever. But if you have a tool in your tool belt and you have actual skills, you can inject some steroids into that growth by looking at charts and whatnot. And whenever you consider that, you want these pullbacks and you need them. Now, but I don't know, man. It just never ceases to amaze me. Even for people who've been in the market for, I don't know, a year or two, and we've seen these days several times. Like, come on, man. This is what the market does. Get used to it.
Yeah, and you need it, and you need to play out over time. Even like, and I would hear this too. I remember not this one so much, but the previous one in 2008. I would have a lot of older people. You get to know people. You talk to them about the market, and they would want to pull their money out because, well, I'm going to be retiring in a year, and it's like, dude, even when you retire in a year, you're not pulling all your money out. Right?
Dude.
You're going to drip it out. So relax.
Yeah. Give it 2 years. Okay? Like, or in 2008 was a little bit different because I mean, one would argue it took longer than 2 years for it to fully recover. But all you're needing at that point in your life, you don't need to get back into the green. You just need to get back to break even and you're good.
Right. But that's a common mistake. People think, well, I'm retiring, so I need to get my money out. And it's like, my God. Like, that's the exact opposite.
Financial suicide, man.
Yeah. And a lot of it's because they haven't paid attention to the market. And now that they're kind of retired, they're kind of paying attention to it. And they're seeing the volatility that they didn't see before.
Right.
And it freaks them out. This is a Pfizer chart. And if you just sit back and look at it, and you own shares here, I mean, really, what made your money was buying here. Right? So, but what about
But at that time, right there where you have circled there at the bottom, people are so close-minded and their judgment is clouded by fear, is that they won't buy there because, like, oh my gosh, it's going to go down to $5 a share from here. It's just going to keep going, and it very well may. But if you have the eye, and it doesn't really take a seasoned eye to see that it's breaking over that line.
Right.
The 20.
Yep. And that's, at the end of the day, it was nice to own it here, but it was really only nice if you bought it here. If you waited until it was proved and moving higher, then, you did it wrong. I mean, that's on all of these stocks, man. The lowest.
people always say, well, it's easier to say what you should have done whenever you look at the past, but I don't know if anybody else has noticed, but stocks tend to do the same thing repeatedly.
Yeah, like look what we're seeing right here on Pfizer. It's rolling over, right? Starting to roll over. Well, that looks a lot like over here. I mean, It rolled over, and then it went down, 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 down. Likely, this will work its way down, maybe, So, I mean, would it surprise you if it came to 48, 46? No, you would just look back and go, yep, there you go. That's normal price movement.
What I tell people, too, is these stocks, I want to be careful how I phrase this, but support and resistance, key levels, those are becoming more and more and more and more credible as we go forward, because the majority of the market and majority of the volume in the market is based on algos these days.
Right.
And that's how algos trade. They trade based on support, resistance, Fibonacci retracements, technicals, right?
Right.
So this tells me, when people say, "Oh, you can't really trust technicals." You can trust technicals more now than ever before.
Yeah. I mean, the hard part is fundamentals. I mean, that's tough. Like, just purely being a guy that reads fundamentals is really tough.
I've talked to 3 different traders on Wall Street who are actually trading on the floor right now, and all of them had said the same exact thing, that we are in a technicals market.
Right.
And we have been for about 2 years now, really since the pandemic started. And fundamentals always have their time in the sun, no question. Mm-hmm. But that dynamic is starting to shift. To where fundamentals don't really make much sense anymore. Over the long term, yes, fundamentals prevail. But in the short to midterm, technicals is where it's at.
I agree, and that's why I outsource all my fundamental stuff. I mean, sitting around reading balance sheets, and they can manipulate that shit so easy. I just let experts do that for me, and then I look to see what they think.
Well, I mean, look at AT&T as an example. They're a prime example, because they have all that debt, but they tend to finesse their books to where it doesn't look as bad at first sight.
Yeah. Yeah.
Because
IBM
all
was
they do
great
is
at
just
that.
push it forward.
IBM was great at that, man. They just buy their own stock. Even though sales are going down, on paper it looks like they're going up, because they just, the price per share, right? Like the earnings per share, I guess, is what I'm trying to say.
Yeah. I mean, market cap, I would say market cap is pretty good to watch, but people are like, look at the PE ratio. PE doesn't mean shit anymore. I'm sorry.
No, not really.
I mean, with today's market, if you guys want to look at any kind of ratio, you should be looking at the PEG ratio, because it factors in growth. Right. But PE ratio, that is so 20 years ago. But
let's look at Z.
Like, for example, right now, like, if you look at Apple on a chart, one would say, "Oh my gosh, Apple is so overvalued right now." Are they though? Right. Are they?
Yeah, I mean, compared to I mean, it depends on what you're comparing it to, right?
Right.
It really does. Man, I like Zynga.
And people, I mean, look at Tesla, man. People have been saying Tesla is overvalued.
Right.
For really since its inception, and all Tesla does is go up.
Yeah. So the market decides what it's going to apply a conservative valuation to and what it's not. And once it's decided it's not, then none of that matters.
Yep.
Which tells me it doesn't matter anyway. Because, like, they'll hold a stock like maybe Johnson & Johnson to that, But then, like you said, Lucid Motor or other stocks, they don't hold them to that. And so it's just the mind of the people that are buying that shit. I mean, what do they consider valuable? And I think at the end of the day, most of us probably bounce true value, like, off of other stocks, right? Would I rather own this or this? And that's kind of how we're making that decision. A guy may look at this and, he's only got $2,000. Is he really digging into cash flow and the books to make that decision? Or is he just trying to decide, do I want to own Zynga or Lucid? Like, And most of that's going to be based off technicals.
So these bands you see here, these are called Keltner channels.
Okay, yep.
And this is one of the reasons why I started using the Keltner channels, is because stocks, majority of the time, stocks don't do anything.
Right.
They just do a little bit of this, a little bit of that.
Right.
Now, occasionally you'll get a huge breakout like you've seen in utilities and all those things, but for the most part, stocks just like to do this, right? This is Apple. So, and what I've found over the past 2 years, because you cannot compare this market we're in now to what the market was in 2016. It's a completely different market.
Right.
So, and what I have found is that stocks, regardless of the type of stock, likes to revert to the mean. So
yes.
This white line is the 21 EMA, and look like clockwork. EMA push up, EMA push up. It's just like clockwork, and all these stocks, especially in this market, since the volatility is all over the place. This to me is where the moves are made.
Is that dotted white line? That's your 21 or 20?
My 21 EMA.
Right, and the Keltner channels use 21 in the center, right?
Yes. Well, you can use any.
You can obviously change it, right?
Yeah, you can change it to a 20 SMA. You can change it to whatever you want. But these bands here, so these are ATRs. This is +1, -1, +2, -2.
Right.
And I don't want to get too far in the weeds on this, but it's all based on standard deviation. It's all math.
And it's very similar to like Bollinger Bands. When it breaks above that green band up there, you can expect a pullback to the mean, which is the center.
Very similar, yes.
Right. And that,
Yep.
I used to be an advocate of Bollinger Bands, and which was the same idea. And it was basically RSI and the 20-day moving average. I mean, when price gets too far away from it, it pulls back to it, right? And when it gets too far down low, it pulls back to it.
It's all based on extremes, especially in this market. So, if it migrates back to the mean,
right,
and it bounces off of it, the next logical place for it to go is up here.
Right.
Right?
Yep. And if you're in a downtrending market, you're going to see it doing like Zynga, pulls away from the 20, comes back to the 20, pulls away from the 20, and it just marches down. Where Apple was in an uptrend, so it's doing it the other way.
So here's PayPal. Like it's pretty much the same thing in reverse. Goes to this outer band, goes back to the 21. Outer band tries to go back. It's like clockwork, man. So, and whenever the market is just doing this, just boom, 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 just bouncing all over the place, this right here is where the trades are made. That's how I see it, anyways.
Yeah, it's funny how a lot of indicators, as you dig down in the world of indicators and stuff, they're really telling us the same thing.
They really are, man.
Yeah, like the really RSI is very similar to, even though it's visually different, and a lot of times I guarantee when you're breaking out of those bands, your RSIs are probably extreme to the low or high.
Let's take a look. Pull up PayPal on your end.
I'm on PayPal here. Let me pull up let's go here. So that was in like mid-November toward the beginning of December.
Yep, right here.
Right. So it's just a lot of these indicators are telling us the same thing, because sometimes people get confused. They see all these and it's like, well, go read them, see what it is, and it'll tell you. If it's an oscillator, it's looking for those extreme lows and highs. And whenever you get them, right, price starts to pull back, starts to pull back toward the 20. And usually whatever direction it's been going, it's going to keep going. If it was a runaway to the upside, it's probably going to keep, like if you look at that Pfizer we were looking at, put Exxon on that chart you have there. Let's see. I'm going to say it's breaking out of the bands, right?
Yep.
Yeah, and RSI's just broke above extreme. So we would anticipate a pullback to your 21 or my 20.
So these outer bands here, this is a +3 ATR. So
ATR is an average true range.
Yes.
Right.
So what this is telling us is that stocks between this outer band and this lower band Stocks spend 99.8% of their time in between these two bands.
Right.
So that tells us that this is going to stay outside of this band 0.02% of the time.
Right. And yeah, it's let me see if I can pull up those. Let me throw Bollinger Bands on here. It's very similar in Bollinger Bands. Once it breaks out of them, the amount of time it spends outside of these bands is very little.
Yep.
And look to the low where it dropped down and it was below the band there.
Yep.
Very little. I mean.
And this is why you see a lot of stocks that either have a huge gap up or a huge gap down. This is what gives credibility to the gap fill.
Right. And I used to use a lot of these bands, and like we were saying, a lot of them start to tell you similar things. Yeah,
I
pretty
think
cool.
the one stock that tends to be outside of this upper band on a consistent basis would be Tesla, but
right.
Tesla's Tesla. I mean,
and that's back to learning your individual stocks.
Right.
The nature of how they move. You may get to learn, wow, whenever that thing breaks the band, it really rips higher, and it's a momentum stock. Well, then cool. Like maybe when it first breaks the band, you give it a little more room. I mean,
And I whenever I first started trading, now mind you, I was trading penny stocks and I was day trading them. Is I would get into a $3 stock, it ripped up here. I'm just using this as an example, and I would get in right here. Then all of a sudden, I kept seeing that it would just reverse on me. Well, Here's why. And people are sitting there trying to hide behind the guise of, well, I'm trading breakouts. This isn't the breakout. This is the end of it.
Yeah. So look at, which is why I've always used like the 20 there. Your big blue candle is your breakout down there. Yeah. That was your breakout move. Put Twitter on there. Yeah, and it's below the bands there on your bottom.
So and then once you get a handle on this, or just whatever the strategy is, then you can start expanding your skills and say, okay, well, shit, what does it look like on a weekly chart?
Yeah.
And if we look at a weekly chart, look at that same damn thing.
Yeah.
So with this argument, and if it goes from here back up to the mean, and this is just the average, that puts it back up to $52. So
look at ARC.
But gosh, man, it's so. I will say, Teladoc is one of her biggest holdings.
Mm-hmm.
If she ends up selling Teladoc at a low price, I get it. You have to offload some of your positions if they get outside your risk parameters. But man, that'll be a really tough one for her to defend.
Yeah, man. So yeah, these are what did I just put on there? These Kelter channel. Same thing, same concept. There's quite a few of these different band things. They're pretty interesting.
Yeah, and what I tell people too, and you tell people the same thing, is that it doesn't matter what you use, just use that.
Right.
So if people start throwing just random shit on their charts, then all of a sudden it goes from, okay, they can see the story, to all of a sudden they can't see anything because there's just too much going on. You have conflicting indicators. And then you really, what ends up happening, especially with newer traders, is that your brain ends up tricking you into it's telling you that there's a story happening there when it's not actually there.
Yeah, for sure, man. I've been down that road where at one point, you got 14 things on your chart, 15 things. One of the guys that first taught me to trade, he had a 10 indicator checklist. It was so much shit down here on the bottom. There was 10 on the bottom, dude. And he would go down the list checking them off, and he needed 7 out of 10. And I just remember as I became better and better trader, I was like, one funny thing is on every one of his trades, like price still broke the 20. So like he could have took off like 10 of those things,
Yeah.
Yeah.
I mean, with this year, now mind you, I'm trading this strategy and also just a normal swing trading strategy similar to yours.
Yeah.
But with this here, I mean, I got one indicator, which is all these bands, two indicators, these tags up here, these are different indicators, and then this one down here. But these all feed off of each other. So it's like a triggering system.
Right.
So, I got a lot of questions on that, but I mean, that takes time to learn all that. Okay, which indicator complements this one? Like, for example, the RSI and the MACD complement each other extremely well.
Right. Yep. That's it. You just don't want to get two that seem to always disagree, because you're not really getting anywhere with that.
Yeah, I mean, whenever that happens, you have indicators that disagree with each other. I mean, you're really, a 3% trade is a win because your indicators are disagreeing.
Yeah, and if you get, what I've found is, a lot of them tend to go together. When they don't, it could actually be signaling something for you. Like, you start getting that divergence,
Yeah.
But if they always diverge, then divergence doesn't do much good for you.
Yeah.
I'm always looking for that divergence. I'm always wondering, I'm always looking for the indicators to be doing well, but price isn't. And you're like, oh, okay. Like, something ain't right here. I mean, divergence is complicated.
This is why the best trades, regardless of how you trade, the best trades are the ones that come to you.
Yeah.
And, and what I mean by that is when all your indicators are aligning up perfectly.
Mm-hmm.
And that's when, okay, let's say your normal position for you is $1,000, but everything looks perfect, but people tend to talk themselves out of it.
Yeah,
but
IBM.
That's whenever you want to turn $1,000 trade into or a position into a $3,000 position.
I did that in IBM. Literally everything I look at lined up. Literally, all of it. And I didn't take it, and it went straight up.
In a case where your indicators, the setup looks good, but your indicators are not quite on page with each other, you can still take the trade, but instead of taking a normal $1,000 position, you take a
small one,
$300 position.
Right. Even 10 shares here would have made you $400 or $500.
Yep.
And something that we could close on. This, let's say you took this one and I took a loser. I might, in my mind, go, well, this trading strategy doesn't work. And you're like, what are you talking about? I'm killing it. And we could both, you can have two people that are trading the exact same strategy, and one crushes it and one loses money.
Happens all the time.
And it's not the strategy. It's just the stocks that you happen to pick. And if you're heavy in one sector and the sector's getting crushed, I would have people, well, your strategy doesn't work. And I'm like, what are you talking about? Have you not seen utilities? Have you not seen... But there does come down to stock selection is part of this game.
Yep.
It's a big part, right? Like it, and sometimes you can, you just get your selection wrong. It doesn't mean change your strategy. Probably means figure out why you got your stock selection wrong. I mean,
right.
Which doesn't mean change your indicators or anything. It means I need to be like you said at the beginning, market rotation. Maybe. So if you've been tech heavy and you've gotten blasted, the lesson is, okay, why didn't I have other things, and fix that problem.
Yeah, and what a lot of people tend to do is if they go tech heavy and they get smoked, then they tend to say, I'm never trading tech ever again.
Right.
No, it's because you were too saturated into tech.
Right.
That was the problem.
You want to be in all these things. And be comfortable with all these things. Because right now, you could be trimming IBM to be buying fucking PayPal. Yeah. Or AT&T to buy. And I probably wouldn't. These are dividend stocks. But I'm just using them as examples. I tend not to do that. I tend not, unless it was a pure trade to begin with, I tend not to sell my dividends to buy non-dividends in my buy and hold. But the theory's the same. I mean, you want different assets so that when assets run up, you can trim them. This is what's going on here. They're trimming. I mean, they're ringing the register.
Yeah, because I and you both would probably bet that these big funds that can really move the markets, they're looking at the same exact.
Right.
So if they look and they say, oh shit, this is running into key resistance, let's go ahead and peel some off. I promise you they're doing that.
Right. I wish in my Discord group, I need to find a better way of organizing this, where you have, not analysts, but people that are kind of specializing in one thing more. So you have oils. Doesn't mean I'm buying all of the problem with people that get into one sector is they tend to buy 40 stocks in that one sector. And it's like, no, don't do that. Give me your best fucking play,
All the stocks in the spiders.
Right. And it's like, okay, this guy's into utilities. Give me the best utility or the one that we're not seeing on our radar,
That's exactly what I do, man. It's like if I see a sector rotation and I'm looking at the spiders every single day, and if I see tech XLK, if I see it down 2%, but I see energy up 1%,
right.
Well, that's obvious divergence there in the sector. So what I will do is I will go to the Spiders website. Okay, look, what is the biggest stock in the XLE?
Right. And let's take you could even get down the weeds. Let's take a sector like online gaming. All right, well, give me the best one. Don't give me 50 of them. Give me one. Give me one that we can have in our portfolio. And if it's a biotech, give me one or two. If it's a oil, give me one or two. And then if there's subsectors inside of that, then cool. Maybe we could add that. That is really the advantage of trading with groups of people. But if all 300-400 people are watching the same stocks, it starts to kind of diminish its value. Other than camaraderie and encouragement, that's obviously valuable.
Right.
But like I don't have, as a human being, I can't make content, write, send out alerts. Like I can't, and then follow all of the little nuances of all 5,500 coins and all the different little, solar stocks and all the it's impossible. I'm one human being. One thing that group trading allows you to do, hopefully, is that some people are looking at other stocks.
I mean, shit. Even if you have scanners and filters and shit, I mean, it's still impossible.
It's impossible, and that's the value, guys. If you're in a group trading, one option, instead of just watching and receiving for yourself and just thinking about you could specialize and spend some time learning shit that maybe I don't know, and then use that. I'm sitting in the dark, and use that. There we go. To help people. I know, me and Ashton send each other stuff and honestly, we're always watching different shit.
We are.
Sometimes you'll send me something, I'm like, what the fuck is he looking at? And then I'll go look at it, I'm like, oh, cool. Because it's easy to get caught in a rut looking at the same shit all the time. Yeah, I get that a lot. Why are we buying this? I'm like, come on, man. I'm not writing you a paper. Like, I've been watching this stock for 9 years. We're buying it because it's cheap right now. So.
Yeah, you down in New Orleans?
Yeah, man. I'm still in my New Orleans house. This is my quasi-office spare bedroom. So I only got 2 monitors. Kind of sucks. It's getting there. And then I had these doors made so it can close off this room. It makes it so if somebody comes visit or something, they can have their own private room. And I'll just take my laptop.
I remember you telling me about that.
Yeah, man, and I'm hopefully going to have you soon here, and we could do a YouTube thing here.
Hey, man, I texted you a couple weeks ago. I'm like, hey, when am I getting my New Orleans plane ticket ready?
Right. Yeah, so that's coming up, and I'll definitely get with you about that. That'll be good.
Cool.
Yeah, man. All right, bro, I'll let you trade. My battery's about to go dead.
So's mine.
All right, be good. Appreciate the, I'm going to get on this Voyager, I think.
You know what? They have a well-oiled machine going on over there. I like it, but I'm spread across a couple different brokers, but Voyager's by far my favorite personally. But.
Yeah, I'm gonna keep an eye on this Lucid too. I just got out of WBX. I probably got out a little early. I was just being. What was the ticker on Lucid?
LCID.
LCID. I accidentally pulled up LUCD, and that looks kind of cool. You ever do that? You pull up something and you're like, oh, I don't know what this is, but I like it.
It happened to me all the time in 2020. For whatever reason, I don't know why, but I took 2 or 3 trades. That was one ticker symbol or one letter off in the ticker symbol, and all 3 of them were like 40-50% trades.
Right.
I would put it in my group, and I'm like, hey, looking at this, I would put the company name, the actual company name. They're like, Ashton, that's the wrong ticker. I'm like, oh shit, but the setup looks good.
Go check the fundamentals. Shit, it's a go.
I mean, there were a couple of them. Shake Shack was one of them.
Yep, Shake Shack. Huh?
And whenever I first entered it, I thought it was something else. I can't remember what it was, but that ended up being like a 60% trade.
Nice. Well, all right, bro. We'll talk soon.
All right, man. We'll let
All
you
right. Peace.
Yep.
Thanks for listening, guys. All right, YouTube. So just to recap, this Lucid looks pretty good. I bailed this morning on LBX, basically even money. Just in case that sell-off got heated. I didn't want to ride that stock down. That one was going to fly. That was a swing trade. That's what I do. If you're short-term swinging, I mean, you got to be ready to bounce if it's not going your way. This Lucid is in the same sector as WBX. I bet it's recovered, huh? Still below the 20. So, might get back in. We'll see. But if you're looking for a trade, that Lucid looks pretty good, man. It's back in the box. That's pretty... And you could easily put a stop at today's low, Put your stop right there, which was 33. God damn, that's a $4 window, though. Jeez Louise. It's a big window. All right, man. I appreciate you guys. It's nice having Ashton on. It's always good to get some guests. You guys be good.